This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So let's go through and use an example to be able to calculate some of those investor ratios that we have just spoken about. So the example here that you've got wants us to calculate 4 separate ratios for the company called Morgan, and they're just the traditional investor ratios spoken about before. So we have dividend cover, dividend yield, price earnings ratio, and EPS. So when we're going through there and looking at the calculation of our ratios, if we start off there, first of all, is it with our dividend cover? So that looks at how safe our dividends are. That takes our earnings per share divided by our dividends per share, doesn't it? So what have we got within the question? We're told here that Morgan is a listed company and has 50 cent equity share capital of $20 million in issue. So what you can actually work out there are the number of shares that the company has in issue. That will be helpful for working out our EPS, won't it? So what we've got there is the $20 million. They are, is it 50 cents each? So does that mean there then that when you divide by the 0.5, there are 40 million shares in issue? Okay, that's going to be really useful working out that EPS figure, which we're going to go through there and use in that dividend cover calculation. We're told that we have a dividend per share, DPS of 10.5 cents. So here what we've got, our dividend per share, if we're working in dollars, that's 0.105, so 10.5 cents. And we need to work out this EPS figure. Well, the EPS figure is also asked to be calculated there down at the bottom. So our EPS takes it there, our profit for the year, and divides it by the number of shares in issue. Now, we've already calculated the number of shares in issue. Was that there at 40 million? Key bit is when you're working out your EPS, you use your earnings figure. Your earnings figure is your profit for the year, which is $22,680,000. So what we've got there, we take the 22,680,000, and that gives me there an earnings per share. If you do that on your calculator, at 56.7 cents per share. Okay. If that's the case, if you then go through and use that figure, so we're working in cents there, so convert it into dollars. You could have just stuck with cents top and bottom, but if you go through there, work out your dividend cover, is that there as 5.4 times. So remember, your dividend cover looks at how safe your dividends are. So how many times can the dividend be paid out of the company's earnings? So reasonably safe there at 5.4. So I've worked out my EPS. I've worked out my dividend cover. My dividend yield, looks at my dividend per share divided by your price per share. And we already know that our dividend per share is 10.5 cents, so $0.105. We need to find the price per share, and we're told there the share price at the most recent reporting date was there at $1.20. So therefore, 0.105 divided by 1.20 Again, don't forget to multiply by 100% to convert it into a percentage. Is that there at 8.75%? There we go. Excellent. Final one that we need to work out, is it there your price earnings ratio, PE? Well, we know that the price is $1.20. The earnings is the earnings per share, and we've calculated that at 56.7 cents. So when we tap that into your calculator, I think that is there at around 2.12. There we go. So some nice simple calculations. We can't really make comment upon them because remember, when you're commenting upon your investor ratios, or any ratios, come to think of it, you need to have a comparative. So whether that is the prior year, whether it is budget, whether it is industry averages, whether it's versus a competitor, you have to be able to have a comparison to make a genuine comment. Okay, there we go. So practice through, go through them, work those numbers. You've not done any investor ratio calculations previously in your financial accounting paper, so this is all new. It tends not to get seen in a huge amount of detail within any part of an analysis question. So you tend to just get a multiple choice question asking you to calculate the investor ratio. That doesn't mean to say it will never crop up within an analysis question, but the way the exam is structured, it doesn't leave much room to go through there and look at the analysis of our investor ratios.